looking at about 184 cents minimum per share in terms of headline earnings. It's on a share that's trading around the 450, 480 level. It is, of course, a small cap, which means wide spreads. Be careful with liquidity in that regard. But the trading update was strong. It puts it on a PE of around 2.5. It's a price to book of around 0.4. Although that book value is perhaps a little bit skewed. Quite simply, part of the trick is that a lot of that book value is land, and they've got the land which they're going to use in future. But the challenge is, can they really get the cash for the land? That becomes the big issue there. They simply build houses. And what we know about South Africa, of the many challenges that we have in our country, is we have a chronic housing shortage. And what they do is they can do from low income, in fact, down as far as government grants, and they can do higher up. They can do houses in the north of 1 million. And in fact, they've got some areas where they can do north of 2 or even 3 million. But as the circumstances change, they shift where they're putting their current building. And they've been focusing on those lower income houses. They've also got a lot more efficiencies coming through in terms of just how they build, saving on space, stairways, fire escapes and the like, without compromising safety, but helping in terms of the costing of the actual construction. So that also fairly significant as well. The pre-close update with the company, they are worried about election years. They're worried about places being invaded and the like. Those certainly are potential risks for the year ahead. What they do is they build structures, but they don't put the tops on the structures. They find that tends to keep away potential invaders. So that's one of the things that they've flagged for. But it's on an immensely cheap valuation. They've been doing significant share buybacks at current levels. The question is, would they pay a dividend? They will consider it, but at this point in time, at the valuation on the share, probably getting better money from share buyback.
I think that they've been struggling with a lot of, let's call it South Africa risk, inconsistent electricity supply, inconsistent water supply. The steel manufacturing business in South Africa has been under some pressure. We've actually recently seen some intervention from government to try and save some of the steel manufacturers. So hopefully there'll be a little bit of intervention to step in to save, or at least assist Hulamin as well. However, they have been doing some things, I think, that count in their favor. They've spent quite a bit of money on what they sort of deemed as a simplification project, where essentially what they're doing is shutting down some plants for products that are not very profitable, cutting some product lines, and changing up their product mix to really focus on the higher margin products. Obviously, rolled aluminium and other aluminium products is mostly what they do. So to showcase that resilience, for example, we look at the EBITDA number that was recently reported down at 7%, but free cash flow from operations was up something like 503%. They reported 272 million rands worth of profit. So they've shown their ability to contain costs and kind of reinvent the wheel, if you will. And that, I think, has made them into a lot more of an agile and adaptable business, which I think, given the sort of macroeconomic context of higher commodity prices, which we think is a base case for the next, I want to say, 5 to 10 years, I think that they are well positioned. And they should do well. And also, we have a stock that's currently trading, around the 3 Rand, 4 Rand mark. It's really been absolutely hammered over the years. This was once a 35 Rand share, or 32 Rand around there. And, it's been under a huge amount of pressure. So I think that there's quite a bit of upside.
Curro, as we know, is an educational stock focused on tertiary and primary and secondary education. They have a market cap of about 6.2 billion Rand. They are targeting a sector which I think largely can be categorized by government failure. So the state hasn't managed to provide quality education across the board to everybody. As a result, they've stepped into that gap and started providing private school education across the board. And they've done this by acquiring or taking over operations of schools in particular areas they believe they can manage. They've continued with strong revenue growth, and they are targeting the future of education. They are targeting the view that the average South African will go over and above to ensure that their children have the best foundational education possible. As a company, they're in a healthy financial position. Although their tax and interest payments have gone up, they are still able to meet them in a very healthy manner. They are targeting to invest about 700 million in 2024 in, again, school acquisition or school takeover. The key questions will be around, can they transition from an acquisitive company to an operational excellence business where the schools are operating at a great clip? They're providing good academic results. That's going to be the key going forward. They charge quite relatively competitive school fees prices. So if the academic performance doesn't match that, they will begin to struggle over time.
I've got three stocks for you today: a small cap, a mid-size business, and a slightly larger mid-cap. They're all three stocks I've covered for many, many years. All three have results coming out in the next couple of months. They are Argent Industrial, with a market value of 1.1 billion rand. KAL Group, formerly Carb Agri, with a market value of 3 billion rand. And then lastly, Reunert, with a market value of 12.2 billion rand. Argent is a March year end. Results will be out sometime in the middle of May. KAL Group is a March interim. Again, results towards the middle to the end of May. And Reunert, again, a March interim. Results should be out at some point, again, end of May. So for us analysts, currently, it is a very busy reporting season. I will caveat that all three of these stocks have been selected in my top stocks of 2023. And I've owned Argent and KAL Group, or Carb Agri, for many, many years. So we'll start off with the smallest company, which is Argent Industrial. As I said, with a market value of just north of 1 billion rand. And that 1 billion rand was actually created this week. This is a share price that's been on a run for the last 3 years or so. It's moved up from 3.52 rand when I first spotted it in March 2019, and it's consistently made my targets. Why is this story elegant and simple? Because what they've done is they've seen the deterioration of this country and the fact that certain industries are no longer that viable, particularly in what I would call the metal bashing industry. So they've sold off low margin steel trading assets and recycled that money into a combination of material share buybacks. They've bought back nearly 40% of their shares in the last 2 years. And very successfully, they have bought businesses in the UK during Brexit and during COVID, when distressed companies were either looking to leave the UK because of Brexit or during COVID when they couldn't operate. And given that 75% of this company's profits are now derived from offshore operations, to Harkon Simon's comment earlier, the devaluation of the rand against the dollar and the pound has seen significant benefits to the underlying earnings profitability of Argent Industrial. So as it stands right now, the stock is trading at 18.49. It's up just shy of 20% year to date. And despite the heady run in the share price, it's still trading on a price earnings ratio of 4.5 times. And on my forecast for March 2024 of 5 rand a share in earnings, that drops to 3.7 times. So it is still a cheap small cap, despite the share price having grown extremely strongly in the last couple of years, showing you that private investors can still pick up bargains in the JSE, which are completely ignored by the wider institutional market for a variety of reasons.